when the 10 EMA is broken, when the half ATR is broken from entry, when it runs into an order block, when the outlier heat map stalls, or after you've rolled a trade, after you're profitable in the trade, a close below the prior day's low. That's exactly when to sell a stock. Welcome to the Outlier Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with Outlier, and this is my style of trading using Outlier. But before we get started trading, let's jump into the lesson of the day. All right. So if you remember last week, or maybe it was earlier this week, we watched a video called When to Buy a Stock Exactly. Well, at the end of that, I said, I don't know when that was going to be. However, there is apparently a follow-up video from the same channel that is when to sell your stock exactly. So I am ready to tear this one apart because we did not at all learn anything about when to buy a stock exactly. So let's see how much we can learn on when to sell a stock exactly. Goran, how you doing, bud? Hadn't seen you in a while. Michael's here. Peter's here, all the way from the Netherlands. Let's go.
Great questions. When to buy a stock exactly? Well, that's great. Now you know when to buy a stock, the things you want to look at for buying a stock. But
we didn't learn how to buy a stock. Like he gave basically justifications on making excuses as to when you buy a stock, all the reasons that you can come up with excuses as to why it's not working. That's what we learned in that video. So let's see about this one here. When to sell a stock exactly.
Now the question is, when should you go ahead and sell that stock? One of life's other great questions, guys. It's one thing to know when to buy it, but then, a lot of people get caught into the game of when do I sell it? And they sell way too early.
Does this dude look like he just rolled out of bed? I mean, who else would you rather get stock advice from somebody who looks like he literally just rolled out of bed?
Or they hold on to a stock way too long and end up taking a big loss. There's a lot of different things, guys. Now, once again, with the stock market, you shouldn't always expect to make money 100% of the time, especially if you're looking at over a long-term perspective.
Wait a minute. Didn't you say in your other video, if there's any possibility of losing money on the trade, don't take it?
Decade, 2 decades, 3 decades. It's a lifelong game, okay? You shouldn't always expect to make money in every single stock you buy. However, the goal is to make money a lot more times than you lose money, okay? That's the name of the game. And the trick is, like, when's the perfect time to sell? So let's kind of get into this. As with buying a stock, selling stock has...
I'll show you the perfect times to sell. I'll show you exactly. When the 10 EMA is broken, when the half ATR is broken from entry, when it runs into an order block, when the outlier heat map stalls, or after you've rolled a trade, after you're profitable in the trade, a close below the prior day's low. That's exactly when to sell a stock. Or selling into strength when it hits one of these exits. Yeah, that's it. Anything he says other than that is wrong.
There's so much debate around it. When's the right time?
Ooh, Brian says 1 ATR. 1 ATR up, like you've made money on it. Because there's 2 reasons to sell a stock, right? Or not reasons, but 2 outcomes. Either, well, 3 if you really want to count like break even. But one outcome is you made money. One outcome is you lost money.
Time to sell because, you've made money on it, or you've lost money on this position, or maybe you haven't done anything with that position. Maybe it's just flatline. Like, what should you do? So a lot of people, they think, okay, you buy in here, your stock's just kind of moving up, and then boom, you kind of get a little pop. You get a little pop right there. You make some money, and some people will say this is the time to sell. Sell it.
He is right about that. A lot of people, when they first see any sort of profit, are so quick to say, I got to get out, right? Let's say you made $100 on the trade, right? That's exciting. That's fun. And it may be the first $100 you've ever made in your entire life. And you're like, well, I got to take it right now. A lot of people feel that way, right? The, what is it? The bird in the hand is worth 2 in the bush or something like that.
Write that in there. You made your money. Don't be greedy. Don't be greedy. Just, you made your pop there. You got, your 10% gain or whatever. Go ahead and sell out of that position.
Dude, I say be greedy AF, right? Be greedy AF when you're trading stocks. But at some point, everybody who's buying it will have already bought it. And the only people who are left are sellers. Because when everybody gets greedy, you need to get fearful, right? When that greed starts moving up as high as it can, that's when you might be saying, okay, everybody who's going to buy it's already bought it. The only people who are left are sellers. And then everybody who is a buyer turns into a seller. So I say be greedy as you can be, but have your exit criteria lined up well ahead of time before you put on the trade. And that's where most people go wrong. That's what separates the best from the rest, is knowing why you're going to get out A, why you're going to get out, and B, not doing a damn thing until you reach one of those circumstances that tell you to get out. That's hard. It's really hard. That is what separates the best from the rest.
And now move on to the next one. Some people will say that, okay? Let me tell you about a stock I bought. This stock was named Facebook. So the stock named Facebook, right? They go public, and it's a rough public offering, okay? And 6 months later, the stock is like chopped in half from where they went public at. I looked into the company, and I really like the company. I understand like they got a big opportunity in front of themselves, and I didn't even understand Facebook nearly as well back then as I do today, okay? And so I look into this Facebook, and I'm like, I'm gonna buy some shares in this Facebook stock. So I buy what
he understands Facebook very well, and because of that, he definitely can't lose money on the trade.
Was at that time a lot of shares worth, for my net worth at that particular time. And I buy into Facebook stock at $18.80.
All right. I don't know where he's going with this, but he just said, and I remember when Facebook came out, I remember I was working at an insurance company in Irving, Texas. Because I remember when the IPO happened and I was like super interested in it, right? And it was around $40-ish. And so it came out, went down, like he's saying, it cut down by about half. And that's where he says he bought the stock. Dude, I can make up any story you ever want. I bought Amazon when it was $5 a share. Yeah, I bought Tesla when it was 33 cents or whatever, right? I don't believe a word he's about to say, because he's probably going to say something like, I bought it $18 and sold it $180. It was a 10-bagger. I'm amazing. I'm a genius. So let's see where he goes here.
$18.80. All of a sudden, very quickly, the stock rises, pops. It goes to like $19.90 or something like that, or $19.80. In a very quick amount of time, I made a very nice profit on Facebook. And I was like, you know what? I'm just going to go ahead. I'm going to take my profit right now and run out of this one. Well, that was about 6 years ago, 5 or 6 years ago. And now Facebook stock is somewhere around $180, I believe, maybe $170, $180. You guys can look it up, ticker symbol FB, somewhere around there, okay? So from the perspective of, should I have gone ahead and sold out of that position? Obviously, no, I should not have. I should have.
I hate these Monday morning quarterback type of videos, right? Where it's like, oh, I bought it at $18 and now it's $180. I mean, he's literally saying what I said. But like, you wouldn't have held it. You would not have held it. There's no justification to say, oh yeah, I would have held it for 7 years. Just because it went up in value, now looking back, you're like, oh, I should have held it. But there's no way that you would have, right? Not unless that was part of your trading plan. Was it? I don't believe that.
Held those shares for the long term, but I made a little bit of quick money, and I was like, whoa, I made a quick money on this one. Let me just sell out and take my gains and run. And I was listening to kind of all the negativity, which Facebook had a ton of negativity around that time. Not a lot of people understood the stock. I take my little bit of money and run. And
he understands the stock. Oh man.
Now it's $180 stock. Do you think that was a very good decision? No, that was a horrible, horrible decision.
It could have been a great decision at the time. Don't discount yourself because its stock went up 10x from where you bought it from and you didn't ride that, right? In the moment, you made a trading decision based on the available data at hand. And for you, that may have been getting out because you made a couple bucks, right? That may have been in the data you needed, right? Clearly, you didn't have an exit plan. And an exit plan that takes advantage of a trend when it's working. But you know what? We all live and we all learn. But to say that, yes, I would have held it for 7 years and got a 10-bagger on this is just foolish. We know you wouldn't have done that. And I hate when you see things from like Motley Fool or Benzinga, which I love those guys, but they do this too. Zacks Investment Research, CNBC, all those names that have been around for a while, all want to tell you, buy this stock, it's the next Amazon. Buy this stock, it's the next Netflix. It's the next Tesla, right? With the assumption that 500x in value. And so this stock is going to 500x in value. And you, astute investor, are going to buy it now and just watch it go 500x in value. This video is pissing me off.
To sell Facebook stock at 19-something dollars a share. It's like a joke price, all right? So that doesn't really work, okay? That really doesn't work. Now, some people say, well, don't sell, early on. Wait till you get a real big gain up, okay? Wait till you make 50%, 100% on your position, all right? 50.
Whoever's telling you, wait till you make 50 or 100% on your position, has no idea what they're talking about. There's no guarantee you're going to do that, right? There's no guarantee in the world, no stock in the world that anybody can point at and say, bro, buy this, but you got to hold it until you get 50 to 100% gain on it. That doesn't happen. And anybody who tells you that is not an active market participant like you and I are.
100% in your position. Well, once again, we can look at me with a Facebook situation, right? I could have said, okay, what if
we don't want to be left with regrets, right? Well, you don't have regrets when you follow your plan. Just make a damn plan.
all of a sudden, I buy in $18, and it goes to 36. I make a double up, and I think a year or two later, it was like a double up, all right? And I sell out at $36. Well, guess what? Over the next 3-4 years, it went from $36 to still $180. So still, it would have been a horrible decision. So when you're buying into a stock you really like for the long term,
it's not a horrible decision if you're following your trading plan. Larry Hite has this. So Larry Hite's the first $1 billion hedge fund manager and one of my mentors who I worked with directly and one of the original market wizards. He has the saying that there are 4 types of trades: good trades, bad trades, winning trades, and losing trades, right? You can have a winning trade that's a bad trade because you didn't follow your plan. I'm going to make a hand signal that I probably am going to regret, so I'm not going to do that. You can have a winning trade that was a bad trade because you didn't follow your plan, you got lucky. You can have a losing trade that's a great trade because you followed your plan and it just didn't work out, right? But the worst ones are the ones where you're winning on a bad trade because that teaches you bad habits. That teaches you how to trade like this. Trade like this, because I'm sure he would, right? I'm trying, my friend. I'm trying. I didn't know where this was going.
term,
I thought we were going to learn how to sell a stock exactly.
to say I'm going to
Raise our blood pressure.
take a quick profit or maybe even a big profit, it doesn't make sense to look at it from that perspective, okay? Of just like, oh, it went up and so let me go ahead and sell out and take my gains. No, that's not the way this game works. Now, some people will say, if you got in a stock and this stock is just not doing crap for you, it's just moving up, down a little bit, and you've been in this stock for a while, move on to the next stock. Some people say that,
Yes. This is one of those some people. If the stock isn't performing, then you should get out. In fact, the math behind it would be like this. Let's put his face in there too. Imagine you've got moving averages that are following this, right? So your moving average might look like that, and it might look like this, right? Well, maybe not so much that. Hang on. And it might look like this. Yeah, something like that. But eventually, those moving averages are going to be crossed by the price, right? Or they're going to flatten out completely, which means that the stock has no value to a trader, right? Because if you're trying to get in and watch it go higher, yet it's going sideways, clearly market participants are not interested in buying it, okay? If no one's interested in buying it, why are you interested in buying it? Because you think you're a genius and that you can get in months before everyone else? Let's be realistic here. If that happens, you got lucky or you knew the stock. But yeah, dead money shouldn't be traded, right? You shouldn't trade anything that's going sideways with the hope and expectation that it's going to go up, because only when it goes up is it going up, right? You don't buy a stock that's going sideways with the anticipation that it's going to go up, because nobody's there to buy it.
It's just kind of like a flatline stock. Move on to the next one, all right? Okay. I have a stock that I bought. This was similar to around the time I had bought Facebook, okay? This company was named Pandora, ticker symbol P. Pandora Internet Radio. This was very different, back then. Now there's been so much innovation in the music game. There's been a lot of things that have changed. Apple Music's come along. Spotify's gotten way bigger. But back then, Pandora was this internet radio company. It was losing money at the time. It was actually, I think, the first company I ever invested in that was actually losing money, if I recall. And they couldn't make money, but at the same time, their opportunity was huge in front of them. And they had massive growth ahead of them, okay? And they were growing revenues like crazy and whatnot. So I bought.
He understands the stock. God, that irritates me.
Into this Pandora company somewhere around, I think it was around $8, somewhere around there, okay? I hold this stock for nearly a year. It goes from $7.
He held the stock for a year. If I'm holding the stock for a year and I'm not making the most money I've ever made in my entire life, because most trades are like 10 days at the most, right? And there's 300 trading days in a year. So if I'm not making 30x my average trade, then I have no business holding this. Because why? Why would you tie up capital for a year? Like, think of it logically, right? Take the trader brain out of it. You want to buy something that has absolutely no change in value for an entire year because you understand the stock. Think of all the things you could have done in that year with the capital that you committed to this trade. For example, let's say he had a $100,000 account, $100,000 account. Let's say he put $20,000 into Pandora. He can't touch the $20,000 and do anything else with it on any other opportunity because he thinks he knows so much better than the market for a year.
$9, $8, and a year later, I'm still the shares are somewhere around $8 still. Okay, and I haven't made any money really in the stock.
But if you knew the stock so well, why didn't it go up? If you know the stock, if you understand the stock, shouldn't you have understood when the price is going to go up, right? I mean, clearly you don't know the stock well enough.
Haven't really lost any money in the stock, and I held it for nearly a year, which at that time was still kind of within my first few years of investing, so it was like all the time in the world, right? All the time in the world. So I got frustrated with this stock, and I sell out of my position completely at a rate around $8. I might have lost a little.
Here he's going to come back, and he's going to say, oh, I should have held it because then it went to $16. Bro, you should have known it was going to go to $16 if you know the stock so well. That's what he's going to say. Watch. Yeah, I should have held it because it went to $16. And even though I was flat the entire year, I knew it was going to go to $16.
A little money, made a little money. It wasn't much at all. Okay, it was basically around break even. I just got frustrated with the stock, and I was like, you know what? Screw this. I'm selling out of this position. Right? I sell this position. Well, 18 months later, a year and a half later, Pandora shares are at $43.
So you're telling me that you bought a stock and then had to wait 2.5 years to make any money on it, is basically what he's saying. Bro, why not skip that first year where you didn't make any money? Skip the last 12 months after that point. Skip the next 12 months after that point and only get in for the last 6. Then your capital wouldn't have been just like dead money for 2.5 years. He thinks he's purchasing a Rembrandt painting. But so many people do, Brian. So many people get into this game thinking, I can't lose. Stocks go up. I understand the stock. Oh my gosh. I understand the stock is basically juju for saying, if I'm wrong, I'm just going to hold it until it works out. And it'll work out 2.5 years from now.
A share 18 months after I sell out of my position, right around $8 a share, guys. So needless to say, that was a really, really bad decision. Just because a stock hasn't done.
It's not a bad decision. It's not. I don't want you as a trader to watch this video and say, oh, only unless the stock goes up 5x did I make a good decision. I'm willing to hold this for 2.5 years to find out if it's going to go up 5x. Are you really? You're not. You shouldn't be.
Much over the past year, or maybe we can say even 2 years or 3 years, doesn't mean it's not going to do a ton in the future for you. Once again, it depends on the business, it depends on where the narrative with the company's going, all those type of things, okay? So this was a stupid idea, guys. I could have made a ridiculous sum of money, okay? This was probably my third.
And amazingly, you would have had a significantly higher rate of return over, divided by days, if you want to think about it, by buying it in the last 6 months of this move instead of 18 plus 20, 18 plus 12, 30 months of that move. You're telling me you needed to hold it for 30 months. 30 months. Good gravy.
Third biggest position at the time. Pandora is probably my third biggest position, and I sell out it completely after holding it for a year. A year and a half later, it's at $43 a share. Okay, so this whole game of it's flatlining. Okay, that doesn't make sense to necessarily sell. And at the same time, Pandora could have gone down, absolutely. But you got to judge off business fundamentals, not what that stock is doing as far as what the stock price is doing. Now, lastly,
don't judge your trades on business fundamentals, because then you're going to be stuck in a trade for 2.5 years before you find out if it's going to work or not.
Some people will say, you know what, if you buy into a stock, you buy into a stock right here, and this stock shoots.
Oh, Brian, good question. Does this next video show I'm purchasing AMC stock last week, waiting for it to recover next year? Actually, okay, so funny story is that this particular channel is hemorrhaging subscribers, hemorrhaging views. And it was really good for a while as far as like content, I guess you could say. People loved it. But all of his stock picks were getting decimated. Like I'd have to go find like who tracked this down, but they went through every single one of his stock picks and just showed how there was 70% down, 80% down, whatever. And it was exactly this, right? Dude is like, I know the stock is going to go up in a year and a half from now, so why would I get out of it? It's brutal, right? It's really brutal when people think that they know more than the market. At the end of the day, this type of investor is who takes money, puts it in the market, and then gives it to people like us who are smarter in the market. That at the end of the day, this is a reality. Speaking of AMC, that was one of my favorite trades in 2021. I'll never forget, I was on Cheddar TV, I was on Yahoo, talking about AMC because this was in 2021. AMC was like the meme stock of the time, and it was around $5 a share, I remember. And now it's been reverse split, so it's all kinds of jacked up. But January 2021, I played this move right here, and I doubled my money, and I got in and I got out. I had no regrets, right? Hey, it could have gone more. That's fine, right? I didn't even get this move up here. I got this move down here. That's the move I got. And then it went like gangbusters without me. But I remember I was on TV saying like, this is so much fun. I love how people are excited about the market right now. And that's just how you have to trade. You have to follow your plan to get in and get out. But you don't do this.
Down, you need to sell out of position, okay? Put a 5% stop loss on it. And then some people will say, you know what, if you buy into a stock, you buy into a
oh, this is going to hurt real bad.
Stock right here, and this stock shoots down, you need to sell out of position, okay? Put a 5% stop loss on it, 10% stop loss. Like a lot of different people have different opinions. Stop loss meaning if it goes down to that price, it's just going to automatically sell your shares. Of course, if it gaps down even more, you need to have a range in there and things like that. That's more complicated trading stuff. But some people say, if it goes down, gaps down 5-10%, sell out of that position. Just get out of it, man. Wall Street doesn't like it right now. Get out of it. Oh my goodness. Once again, this is a really, really bad decision.
No. I'm going to preface this and say, I don't endorse anything he's about to. Whatever he says next is 100% wrong. Not just I disagree with him. He is factually incorrectly wrong. So before we listen to what he says, one of my mentors, the greatest trader in the entire world, Mark Minervini, had this post right here. Now he says, right, knowing you should sell a stock when it does this, right? And this is what he's saying. This is the 5 or 10% stop loss he's talking about. Knowing you should sell when it does this, but fearing that it's going to do that, right? You're afraid to take that loss right here because you think it's going to go up. But what actually happens is you get caught in this. And that 5 or 10% loss turns into 20, turns into 40, turns into 60. Okay? This is why you have to follow your plan. Because it absolutely could do this. It absolutely could go up. But in all reality, if it's already falling, it's in a downtrend. And there's a great chance it's going to continue trending that direction. So, man, did I pick the right video today? Okay. Like I say, whatever he says next, don't listen to him.
What would Warren Buffett tell you in this situation?
Warren Buffett would say, rule number 1 is make money. Rule number 2 is rule number 1 is don't lose money. Rule number 2 is refer to rule number 1. That's what the fuck he would say right there. Pardon my language. Oh, I'm heated.
Warren Buffett tell you, pretty much any great value investor, what they're going to tell you, you buy a stock here, okay? You love this stock. And it goes down to here, and you still love the business fundamentals of this company. You don't sell, you buy more, okay? Warren Buffett, myself, any great value investor, they're going to say, you really love business fundamentals of this company.
I'm actually getting heated over here. Like my pulse is quickening. My adrenaline is starting to flow. I said a naughty word. Like legit, if you loved it here, oh, you probably really love it here when you've lost half your value. And you're going to think it's the greatest buy of all time when it's down 70%.
Company. If I love a company, like their business fundamentals, I think they're going to do phenomenal over the next 3, 5, 10 years. I really believe in this company a lot. I look at the numbers, look at the business, everything in general. And I look into this company, I love it. It goes down 10%, and I still love the business fundamentals here. Does it make any sense at all for me to sell these shares?
Yes. Hang on. Paul Tudor Jones, losers, average losers. So this is Paul Tudor Jones, one of the greatest traders of all time. Somebody who Mark Minervini tried to emulate. And he even had to put this on his wall behind him. Losers, average losers. What does that mean? That means if you buy a stock for $10 and it's gone down to $5, and you're like, okay, I'm going to double up. I've now averaged my price from $10 down to $7.50, right? I've split the difference here. I've doubled up my shares. By doing that, you are now making it even worse because you're throwing good money after bad. Maybe I shouldn't have picked this video.
No, it makes sense to buy more. It's like going to the H&M, and you see a shirt there in the window, and you're like, dang, I really like that shirt. I think I want to buy that shirt. I don't have quite the money on me today to buy it, but maybe I'll come back next week. Next week you come back, that same shirt's in the window, but now it says buy one, get one free. It says buy one.
Hell yeah, let me buy 2 shirts. But if you actually think you're going to turn it around and sell it back to H&M at a higher price, you are blind. You are wrong. You need to be committed to a mental institution. Because H&M is trying to discount that and get it out the door because nobody wants that shirt. So they're trying to say, not only am I going to give you one, I'm going to give you 2, right? You can get 2 shirts for $5. But we're not even going to honor our refund policy on this, right? If you bring it back in a week, we're going to say, I'm sorry, we aren't carrying that anymore, and we're not even going to take a refund. Okay? Do not think that the marketplace wants your stock after it's already been beat up.
I want to get one free.
But Buffett holds companies for years, but they generate revenue and profits. Dude, I bet he loves Enron stock.
Or buy this shirt, get 10% off. And it's like you going in the window and saying, you know what? Now there's 10% off. Now let's buy one, get one free. You know what? I don't want it now. That shirt is not my, you know what?
No, what he's saying is you bought it at full price. Let's say $10. And then you walked in and you see it's buy one, get one free at $5. Cool. Now I have 3 shirts. But you're not going to sell it back to H&M. They don't want it. The marketplace has decided price is going down.
I don't want it. What? Like what? Like that makes no sense whatsoever, guys. That makes no sense whatsoever. Now, if business changed and things like that, it's worth selling out. But if you still like the business fundamentals, just because the stock goes down does not mean you should sell out of that.
You're right. You can have a whole closet full of these shirts if you love them. You can have a whole closet. You can be the one person who's bought every single shirt in the whole world. You are totally right about that. You could be the majority shareholder of this company if you wanted to do that. But that doesn't mean it's going to go up in value. In fact, if you're the only one who's buying it, nobody else is going to buy it from you. And if no one else buys it from you, you could set whatever price you wanted, and no one's going to buy it from you.
That share. I cannot tell you how many people sell out of shares when they go down. Okay, imagine there were people selling Facebook shares when it was at $20 a share. I mean,
yes, because they were following a trading plan and controlling their risk. In this case, you have no risk control. You have no risk control, and you're okay with not only having no risk control, but throwing additional risk into a stock that's already shown to be risky.
It went down to $18, $17, right? There were people selling at $20 a share of Facebook, and we're probably like, man, I really like this company for the long term, but it just went down a bunch, and I lost some money on it, so let me just sell now. And then they sell the position, and now Facebook's, you know what I mean? Just think about that, guys, from that perspective.
Yeah, just think about that. They didn't want to lose money. Weird.
Nvidias of the world, all these hot stocks, Amazon, you know how many times Amazon's gone down a lot? It's gone down a lot, and many times. Tesla, there's been so many shares. Netflix, I still remember it was like yesterday.
Dude, he's backwards looking at these charts, right? He's backwards looking at these and saying, bro, Amazon went down. How could you be such an idiot to sell out? Because it went up. Don't you know that it's going to go up? There is no use case. There is no guarantee that these stocks are going to go up. And not only are they not going to go up, but if you buy it at this high, which happened to be June 2024, you buy it there and you wait until November 2024, that's 5 months of dead money, right? If you're really waiting on it to just get back to break even, that you just wasted 5 months of investing, half a year of investing. Brian, it's like being inside of a burning home and thinking that opening more windows will help you put out the flame. Yeah, but are they fishnet shirts? Are they fishnet shirts? That's the real question here. If they're fishnet shirts, then yeah.
Yesterday, Netflix shares were like $30 a share, right? And now Netflix is 300, I think, or somewhere around there. I want to say Netflix. Like guys, you got to judge it off where the business is going. Okay. So now let's get into why.
Guys, you got to judge it off where the business is going, right? We can see the future. We understand that Netflix and everything else is going to go up in the future, right? 17 years from now, because we know the stock, it's going up. Okay. So like every time it goes down, just buy more. Yeah, it makes sense.
I sell out of a position. There are 3 reasons why I decide to sell out of a stock. All right. The first one.
Finally, we're 10 minutes in. I've spent 33 minutes griping about this video. I apologize. I did not realize it was going to be this bad.
The first reason I would decide to ever sell out of stock is what I call bad. Okay. If things have gone really bad for that company, business fundamentals, not stock price performance. I'm talking about underlying business fundamentals, income statements, balance sheets.
If the fundamentals have gone bad, not stock price, that's when you sell. You probably could have got an idea that things were bad by looking at the price of the stock as it was going down before you decided, oh yeah, the fundamentals are bad. His exit criteria is when things are going bad. I think that's probably the most childish trading strategy I've ever heard. The stock is going anywhere, up, down, sideways, doesn't matter. I know this company is going to go up, so just buy it. But if the fundamentals are going bad, irrespective of what the price of the stock does, that's when to sell. I assume that would work if you've never learned anything about stocks ever, and you just happen to get lucky. But good gravy. It's
things like that. If things have gotten really bad for the company, I may sell out of the position, especially if there's like usually like a few things that are like my bullish theses on stocks. Okay. Any stock I buy into, I always have bullish theses. Like there's like 1 or 2, maybe 3 things I really love about that company and why I think that stock's can go up a lot over time, why they're going to expand their revenues and profits and things like that. So I buy into the stock and all of a sudden, one of the 2 or 3 bullish theses I have on it goes really south. Like one of the business lines that I'm like, I think they're going to expand and make that into a huge thing. If all of a sudden they exit that business line, what do I have left at that point? What do I have left? That's probably a situation where I want to
probably no dollars. You probably don't have any dollars left. Just saying.
Sell. Okay, things have gotten bad. Maybe the company does something crazy with the balance sheet where the balance sheet was a phenomenal balance sheet, but over the course of 2 or 3 years, maybe all of a sudden the company starts losing lots of money. Maybe they start paying out all their money in dividends and whatnot, and all of a sudden this balance sheet goes from a balance sheet that's rich in cash and investments, and all of a sudden they got a ton of debts on it. This is a situation that things have gone bad. Like it's time for me to get out of that company. If the fundamentals underlying in the business erode, if the bullish thesis I had going into that stock erodes and goes away, then what am I in those shares anymore? It's time for me to just get out. Whether I have made money in that stock, whether I've lost money, whether the stock hasn't done anything, if the business fundamentals erode and get worse for the company, and it's not like, oh, the company missed numbers by like 3 cents, or the company missed numbers by 5% of the revenue. Like I'm talking about actual business fundamentals, like the big things that are overarching that are really going to dictate that stock price over the next 5-10 years. If those things go away, it's time for me to get out of that position. I don't care if I made money, lost money. It doesn't matter. It's just time for me to get out.
Well, you probably didn't make any money. So we're not going to worry about that part.
Out of it. The number 2 reason why I'll sell out of a stock is honestly if it's just gone up too much. Okay. Now, what do I mean by gone up too much? What do I mean?
Well, that sounds fun, right? So I exit the stock if something goes wrong with the company fundamentals. Or I exit the stock if the trend just continues. Oh man, if that trend continues, I got to get the hell out of here. Now, granted, I'll sell into strength for sure, but I quantify that, right? I quantify that, right? When the fear and greed index on here reaches a certain point, yeah, I'm looking to go ahead and get out. But if it's trending in one direction and it doesn't get overly greedy using the outlier indicators there, gone up too much. I at least hope he quantifies this. But remember, he said earlier he had his example of, going from 8 to 40 something dollars. Gone up too much must be going up 1,000%. Because if it's anything less than that, then the first half of this video is him completely contradicting the second half of this video. Right? Because going up from 8 to 40 something dollars, that's pretty great. But apparently to him, that's not quite enough. That's not too much. That going from 8 to 48 is not too much. Oh my God.
I mean by this, because once again, this almost goes back to the whole thing we were talking about earlier. Well, the stock pops 10% or 50% or 100%. Do you go out and sell out? What do I mean by the stock gone up too much? Is the way I like to think about it is, okay, if I didn't have a penny invested in this company right now, would I even contemplate buying shares in the stock as of right now? If the answer is no.
No, because the only time you buy more is when you're losing money. You said that.
It's time for me to sell those positions, okay? Think about it this way. Like why would you expect someone else to pay a super high price for those shares if you were like, I would never pay this price, for these current shares? Like, that makes no sense at all, guys. That's when you get into greed territory. When you're thinking in your head, like someone's crazy for buying these shares right now. I own these shares over here, but someone's stupid if they bought these shares off me. Like, they got to be crazy. I would.
So when your Pandora stock went from $8 to $9, you probably were saying that. Or when it went from $8 to $12, you're probably saying that. Or is it only when it hits $48, right? When it's only 5 times higher, you actually think, oh, some fool would never buy this.
Would never buy these shares at this price. Now, if you're thinking like that, like you need to get out of that stock ASAP, okay? Don't ever expect someone to pay a crazy price for your shares when there's no way you would pay that type of price, all right? Now,
dude, expect what? He's contradicting himself, right? I want to say something. I just don't know how to articulate it. So I'm not going to say anything right now.
there's certain times where you just invest in a certain amount of money in the stock, and regardless whether it goes down more or whatnot, like you're set. Like, you have your position built in that stock. That's not what I'm talking about. I'm talking about if you didn't even own any shares in that stock and you looked in that stock, you're like, dude, I would never buy shares in that stock. If your grandma came to you and was like,
so if the price has gone up, he doesn't want to buy more. If the price is going up in an upward trend, he doesn't want to buy more. But if the price has gone down, he has no problem with doubling up, and maybe doubling up again. Let me catch up on the chat. Mikey Mike says, it's on the internet, so it must be true. I heard Abraham Lincoln say that exactly. Yes. Brian says, if we could see the future, we would not be watching this video, bro. Exactly. Well, for him, any stock you buy goes up. So that's the future, right? Because I would never buy a stock that goes down because I know the stock so well. But I thought he was upset because he exited early and its stocks continue to grow like Amazon. That's what I'm saying. That was the first half of the video. Going up too much, he needed to make a lease payment on his Lamborghini. Yeah, he wishes.
should I buy some shares in the stock? And you're like, Grandma, no, like the stock is way overpriced right now. I still own the shares, but don't buy these. If it's like that, guys, oh my gosh, like, you need to get out of that stock. That's just crazy, okay? That's just crazy at that point in time. And the third reason I will sell out of a position is what I like to call Michael Myers, all right? The Michael Myers effect, I guess you could say. Anybody that's ever seen the Halloween movies knows Michael Myers. And basically, he's a...
Quick. What do you think the Michael Myers effect is? I don't know what it is. I really want to know what your opinion is. We're all going to conjecture on this together. I'll put it in the chat. What do you think the Michael Myers effect is? If it gets stabbed in the back, like maybe it has like a quick sell-off, but surely that can't be it, because that's a buying opportunity for him, right? Like, let's look at Amazon. It is getting like stabbed. Maybe that's some sort of like chart pattern, right? Maybe it needs to look like a knife. Like, imagine this is a knife. It needs to be a little pointier than that. Imagine this is a knife, right? And then you've got your Michael Myers hand wrapped around it. Yeah, right. Ugh. Maybe that's the chart pattern he's looking for. Brian says, this is one of my words. This is one of my words, Brian. I say this to my son all the time at school when I'm picking him up or dropping him off when people don't respect the traffic laws around the schools. I'm always like, oh, look at these imbeciles. Yeah, this guy is an imbecile. Well said. My deceased grandmother still has more sense than him. All right, let's learn what the Michael Myers effect is in 3, 2, 1.
This super villain, whatever you want to call him, and he kills people and whatnot, serial killer. And he comes up behind people. And I'm talking about this in the respect that companies have Michael Myers coming behind them all the time, okay? The question is, do they have a serious competitor, right? Everybody in retail over the past 5-10 years has had this little company, this Michael Myers company. They might put a little software in that, but they've had Michael Myers coming behind them. And what is Amazon is doing is killing retailer after retailer after retailer, and it's causing death to them all, okay? And, some of them are just getting sliced up a little bit at a time, just a needle here, needle there. Other ones are getting machetes into them, okay? That's what it is right now. So if you own a company and Michael Myers is coming behind you, man, you need to freaking get out of that stock, okay? I don't care what PE.
Are you saying that? I'm not sure you explained that very well. Is he saying something like M&A activity? Is he saying like somebody getting, it sounds like he's saying a competitor coming into your industry, like Amazon going into, Amazon Pharmacy or Whole Foods or something like that. That sounds like what he's saying. I'm not 100% sure. That wasn't very clear. But clearly it's a very specific reason to get out of your stock.
That company's at. I don't care, what that company has going for it or things like that. If you feel there's something serious coming behind your company that's going to be a major competitive threat, regardless, you need to get out of that stock, okay?
All right, a competitive threat, sure.
It's not a stock you want to be in. If you know in the back of your head, like you feel like your company's not going to win this war.
He knows the stock that, and he knows the competitors that are coming up and coming, and he's way smarter than everyone else in the marketplace who's already invested in the stock. He knows when those competitors are coming through and they're actually going to make a difference. Got it. And you can do that too for the low price of $9.97.
And you got to be realistic with yourself, okay? You can't have too much pride for that stock. Remember, you're dating stocks. You're not marrying stocks in this game. You're dating them, okay?
Oh, give me a freaking break. Dating stocks and not marrying stocks. Okay, I date stocks. You marry stocks, right? I'll trade it for 10 days at a time. You're saying, oh, I should have held this stock for 2.5 years to make any money on it. There's a big difference between you and me, bruh.
You can move on to the next one. When you think about it in that respect, guys, if there's a major competitive threat, you just have to be real with yourself, okay? And say, man.
Be real with yourself. Don't worry about the fact that you're down 70% and that the company fundamentals haven't quite gone to your bad status, or it hasn't gone up just yet, or especially not too much. You got to be realistic with yourself, right?
And I don't think I want to own these shares anymore. Like think about it. Think about if you own.
There is no quantification to this. I just don't think I want to own these shares anymore. Stocks love it when you guys fight over them. They do. And in fact, Mike, that's what makes the market, right? He has a different opinion than I do. He trades differently than I do, if he even trades. And because of that, that's what builds a market, right? There's always a buyer, there's always a seller for different reasons, one or another. So, fair point. It's because of people like him that people like us are able to get into the market and take the money from people like him.
Own Sears stock, okay? You own Sears stock for the last, 15 years or whatever. You could have seen all this stuff coming unless you were completely delusional. I don't know who's been owning Sears shares over the past, have they gone bankrupt yet? I'm not sure. But who's owned Sears shares over the past 10, 15 years?
Yep. He did say feel. When I don't feel great about it anymore, that's when to get out. Bro, if Sears is getting murdered by their competitors, you would have seen that ages before. Right? Let's say this is Amazon stock, but imagine this is Sears stock, right? And it's going up and up and up. And then, it's got some choppiness. Oh no, it's broken down. Oh man, it's lost all the support. Oh my goodness. Now, this is not the best example because it does recover, but you're going to know months and weeks well before the stock price is hitting rock bottom when you're like, I don't feel so good about this. Maybe I should get out. It's okay to take a loss. It really is. Because it's much easier to take that 5-10% loss than it is to take a 95% loss.
It's got to be idiotic. You look at it, they had Walmart coming after them and Kmart, and their sales were declining, and things were getting worse for that company. They started taking losses, and they bought Kmart.
Bro, if you're waiting on company reports once a quarter to tell you if you're losing sales to make your decisions on whether to sell or hold a stock, you are so far behind the ball.
Which was a horrible decision, if I recall. They bought Kmart. My goodness, what a disaster that was. Then all of a sudden, Amazon starts coming in a major way into retail, especially over the past 5 years, and they start stealing away, sales from not only
Brian treats stocks like one night stand.
but all these other competitors, like Michael Myers was obviously coming, but people were delusional and like, oh no, it's not going to happen to my company. You've got to be realistic with yourself, guys. You don't want to be in stocks that is obvious there's some competitor coming in and they're going to start taking major market share. Those are the type of companies you don't want to be in, man, because that's just a bad situation, man. Your company's more than likely going to get rolled over. And now, once again, this doesn't just mean that any competitive threat that comes into the space is going to knock your company off. No, you've got to be realistic with yourself. What is that company's brand strength? Do they have brand strength in pricing? Do they have brand strength and consumers just love that brand? Will consumers buy that brand even in a recession? You got to think about all these type of things, guys. But if Michael Myers is coming behind your stock, man, you just need to freaking get out of that thing, okay? I don't care what PE he's at. I don't care if it's at 5 PE or 8 PE. They got some major dog coming in there and they're going to take share and they're going to knock your company off. Like, get out of it, man. It's just worth it to get out of it at the time, guys. So those are 3 reasons why I choose to sell a stock. I hope you guys really enjoyed this today. Make sure.
I didn't enjoy this at all. You suck. Sorry. No offense. I mean, you're probably a nice guy, but I didn't enjoy that at all. I thought it was really bad. In fact, I think a video like this would have people lose more money than they could ever imagine. I think a video like this would put people on the wrong track and financially doom them. I think this was horrible. No offense. Listen, this took 3 times as long as it should have. But I hope you got 3 times as much value listening to an actual trader who makes money in the market versus somebody who thinks that they know how to make money in the market, yet at the same time are totally willing to double and triple up on a stock as it's falling to 0. So if you did, hit the like button. Now listen, the market's already closed. We're not even going to continue on with the trading room. But we'll get to do this again tomorrow, and hopefully I have a better video for you. But please keep in mind, I don't do this just for fun. Right? I do this because I want it to be educational, because this video has way too many views. This video has 294,000 views. Unfortunately, 294,000 souls were led astray. 294,000 people got really, really, really bad messaging. And I'm trying to do my best to counteract that one person at a time. So hit the like button. That way it shares that out to more people. Out on Michael Myers by Mr. Rogers. Yeah, I like that. So you guys have a fantastic afternoon. Thanks so much for coming and hanging with me. I'll see you right back here tomorrow. Talk soon.